Look at the prime brokerage business for us. It's been strategic in the past, and it's a good business in itself. And we really see this as an idiosyncratic event. Therefore, you should not come to conclusions too quickly from that perspective. Also, in view of what we are and where we want to go as the global wealth manager in the world, the leading wealth manager in the world, we do realize that the capabilities underlying the prime brokerage business are capabilities that we certainly need in order to support that business. Now, as said, we have to learn from what has happened here. We have to take these lessons in. We have to look at it on a client relationship basis as to where the leverage is and where the positions are, and that's the way we have to go about it. But the business itself is strategic.
And last quarter, you announced a $4.5 billion share buyback spread out over the next few years. Am I right to assume that the share buyback plans are still in place? They have not been impacted by this event?
No, it's clear that even after this loss, our net profit has increased by 14% to $1.8 billion. That we have generated a really high return on CET1 at 18.2%, and that we have even increased and improved our capital base to 14% CET1 after this loss. So the first quarter was a particularly successful quarter, and we were able to absorb that loss, and therefore we can also continue with the share buyback program.
I'd like to turn to the outlook. There is a line in the press release, and you said that we expect our revenues in the second quarter of 2021 to be influenced by seasonal factors such as lower client activity compared with the first quarter of 2021. Are you saying that it is unlikely we continue to see this pace of activity for the rest of the year?
Well, as you know, the second quarter is always a quarter that has a bit of lower activity. Also getting closer to the summer season, so to say. That's one. The other thing that we see is that all of the supportive information and news that came out in terms of monetary policies, fiscal easing, good investor sentiment, good numbers as well, improved economic indicators on the back of the pandemic being over. All of that news has gone into the market. So from that perspective, the market, is what it is, but it will not be as volatile as it was in 2020. We do expect the volatility in the market to be higher than in 2019. So still some asset rotations coming through. We do also think that the current asset levels will continue to support our income base. As you know, the asset levels themselves are higher than, and therefore we will continue to generate income on that. So it'll be a mix of those two that will influence our second quarter results.
And in terms of asset gathering, 2020 was a great year for UBS in terms of net new money coming into the bank with more than $100 billion in net new money. How is that number looking for 2021?
Well, if you go to just to take a look at the first quarter, you see that we had $36 billion of net new fee-generating assets coming through in the global wealth management business, $26 billion of net new money coming through in the asset management business across the different channels, whether it's the wealth management channel, whether it's the third-party wholesale channel or the institutional channel. So from that perspective, we see actually a continuous trend of money coming into UBS. We're now at a total invested assets level of $4.2 trillion, which is increasing not only by the market but also by new money coming in. So we continue to be very successful on that.
And are you looking to expand your asset management activities by making strategic acquisitions in that space?
Well, if it comes to our strategy going forward, it is very clear that we are a global player in the asset management and wealth management sphere, and that we want to continue and build on our lead there. So from that perspective, we do see organic growth in both wealth and asset management as clearly the way to go. Where there is assets or capabilities for sale that could really fit our strategic journey or improve our scale even further, then we would certainly consider that.